You know that holiday shopping spree you went on? Ever wonder what all that tapping and swiping actually means for the big picture, for the global economy? Well, Visa's latest earnings report just came out. Believe it or not, it gives us a really clear window into all of that. So let's dive in and break down what their numbers are telling us about, well, us.
Right out of the gate, we've got Visa CEO Ryan McInerney basically saying the quarter was a huge success. And he points to two things. One, people like us just kept on spending. And two, the holiday season was a total blockbuster. This really sets the tone for the wild numbers we're about to see.
And boom, here's the first number that'll make you sit up straight. Nearly $11 billion in net revenue. Just to give you some perspective, that's more than the annual GDP of some smaller countries, and they pulled it in just 3 months. It's just a staggering figure that shows you the sheer scale of what Visa is doing.
But you know, it's not just about how big the number is. It's about how fast it's growing. A 15% jump in revenue from this time last year? That shows Visa isn't just a giant, it's a giant that's still picking up speed.
Okay, so we've got these massive, really positive numbers, but what's actually going on behind them? Let's peel back the layers a bit and really understand what they're telling us.
So you'll always see these two terms in finance reports, GAAP and non-GAAP. And it can sound complicated, but it's not, I promise. Think of it like this. GAAP is your total income, including maybe a one-time bonus you got. Non-GAAP is more like your regular, predictable salary. They're both super important, but they tell slightly different stories. And in Visa's case, both of those stories are looking incredibly strong.
We know the results were great. We get that. But now for the million-dollar question, or I guess in this case, the billion-dollar question, why were they so good? Let's pop the hood and see what's really powering this thing. And here it is. This is the trifecta right here. Payments volume is up 8%. That means altogether, we're just spending more money on our cards. Processed transactions are up 9%. That's us tapping, swiping, and clicking more often. And then there's cross-border volume, a huge deal for Visa, up a massive 12%. That's all of us booking flights and shopping while we're on vacation. It's just the perfect combination of trends for them.
And here's the proof, taken right from Visa's own report. You can literally see that huge spike in spending right there in December. That's not just some abstract line on a graph. That is a direct picture of that holiday shopping madness we were just talking about. The data really tells the story here.
So we know a ton of money is flowing through Visa's network. More than ever, actually. But how does Visa turn all that activity into, actual cash? This next part breaks down their business model, which is actually pretty simple but incredibly powerful. See, Visa gets paid in a few different ways. Service revenues, those are fees they charge banks based on how much we all spend. Data processing, that's what they charge to make sure that when you swipe your card, the money gets from your bank to the store safely and instantly. And hey, remember that 12% jump in cross-border volume? That's what fuels their international transaction revenues, those extra fees when you use your card in another country. It's just a really smart, diversified model.
A great quarter is obviously fantastic for Visa, but what does it mean for the people who own a piece of the company, the shareholders? Well, let's take a look at how Visa spreads the love.
Okay, prepare for another huge number. Over $5 billion. That's how much cash Visa gave back to its shareholders in just 3 months. They do it through dividends and by buying back their own stock. I mean, that's more than a lot of companies even make in a whole year. It's a massive signal of confidence in their own business.
And let's just quickly talk about that term, share repurchases. The easiest way to think about it is like this. Imagine you have a pizza with 8 slices. If the company buys back 2 of those slices and just makes them disappear, the 6 slices left are now a bigger piece of the whole pie for everyone who still has one. That's all a share repurchase is. It's basically a company saying, hey, we think our own stock is a fantastic investment.
So Q1 was an absolute knockout, no doubt about it. But can they keep this crazy pace going? Let's see what Visa itself is predicting for the future.
Looking at their own forecast? Yeah, one word comes to mind, confidence. They're expecting to keep growing revenue by 10% or more, not just for the next quarter, but for the entire year. That's a really clear signal that they believe our spending habits are here to stay.
And that really brings us to the final thought, doesn't it? Visa's amazing quarter is basically a mirror, reflecting our own collective confidence in spending. But as we look at the year ahead, with all its uncertainties, the big question is, will this trend hold? Will we keep spending like this? That's really the billion-dollar question this whole report leaves us with.